My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Complacency? Complacency is a two-way street. We always hear how the bulls are being complacent and ignoring downside risk. But we almost never hear the bears are being complacent and missing out on terrific opportunities, which I find to be absurd. Nobody does complacency like the bears, do they? We see this conundrum play out so often, including today, where the Dow advanced 126 points, S&P gained 0.97%, and the Nasdaq followed 1.45%. Remember, last night, I spent a lot of time talking about how we got a slew of downgrades yesterday that I didn't like, a slew after stocks that reacted to negative news already. To me, they seem like gratuitous notes that would end up costing you money if you listen to them. Why? Because in the last decade, the toughest thing to do is to hold on to good stocks. But analysts and commentators love to take aim at long-term winners. Their jeremiads have scared so many people out of some amazing gains that it seems downright wrong to me. Plus, even if you wanted to take action on these downgrades, you should wait for a bounce at least before you do any selling. Sell. And if it's a downgrade based on valuation, you need to be ready to buy the stock back at a lower level, which is incredibly hard to do, even for the best of traders. But the complacency of the bears allows them to keep mauling these stocks even when they're already down, often with the phony nod to the macro, the big picture state of the economy. That's really designed to freak people out. Consider what happened yesterday. I was loath to even comment on the downgrades of Apple and Amazon, but I felt I had to because this isn't the first time I've had to strap myself to the mast and hang on for dear life when I heard the tenor of these downgrades. Real scary. If you recall, the analyst who downgraded Apple yesterday was talking about no green light to buy a new iPhone until 2026 to 2027 because of hardware flaws. The Amazon downgrade was concerned about consumer spending headwinds. This right before Amazon's big Prime Deal Days event, where the bargains are positively mined. I mean, you see the Apple deals? You should check them out. They're really amazing. Now, I told members of the CNBC Investing Club that you needed to either stand pat or actually buy. That's right, buy the downgrades, because both Amazon and Apple had come down hard from the recent highs before the downgrades. I really like buying some stocks after a 5 to 8% pullback because, well, it's one instance where you get rebounds, and two, you're certainly not top ticking. Let's consider the trajectory here. Amazon reported a quarter that was widely disliked almost 3 months ago. The stock was trading at 184 when the quarter was reported. It then quickly plummeted to 161. But then it pirouetted all the way back to 195 a little more than 2 weeks ago, above. That's right, above the so-called bad quarter, like it never happened. It then goes down almost 9 straight points, which is where it then catches the downgrade. The long-standing issue with Amazon is that you can't get in and get out. A pullback like yesterday, I found it was like a godsend. Yesterday's downgrade gave you a second great buying opportunity since that quarter. Sure enough, today, with no upgrades or downgrades, what happens? Well, the stock bounces and you're free to sell at a better price if that's what you really want. Same deal with Apple. Here's a stock that was at 226 at the end of last week. Lots of negativity built in about how the iPhone 16 is already a bust. Yesterday's downgrade pulverized the stock, sending it down to 221. Today, without an analyst call, it gained $4 and it's right back to 225. If you want out of Apple, this would be the day to do it, not yesterday. Unfortunately, if you were trying to get out and get back in at a lower level, it's already too late. Now, I'm not saying that Apple stock can't go back down again. Just the opposite. It can. I am saying that this getting in and getting out and getting in and getting out stuff is fraud, filled with tax considerations, frictions, and is not for you to do at home. Still, these were big impact downgrades. They drove the stocks down heavily. They, in the parlance of Wall Street, worked. They made people take action. Man, oh man, am I ever sick of people taking action. And then the action's being publicized. Today we got a downgrade of Microsoft saying that Wall Street's overestimating AI revenues. Oh, are we? A month ago, that would have been a timely call. Problem is, Microsoft stock had just sunk from 441 to 410, almost in a straight line. So the analyst is coming in after a gigantic decline. So how the stock do with a downgrade? What happened? How low did it go? Did it have the same impact as Amazon and Apple downgrades from yesterday? Hardly. Microsoft stock actually went up. It rallied more than $5 today. I say, wowza!
House of pleasure.
Let me tell you what happens if you're at a research firm and you cover Microsoft after today's big gain. Well, you've been huddled in your bunker. You've been frightened. You've been worried about the macro, petrified of the stock sinking lower a bit every single day. Drip, 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 drip. You're thinking of making the call to downgrade the stock because the pain's too great. You got to get rid of the pain. You got to get rid of the anvil in your back. But then this other analyst from OpCo beat you to it. Once you see, though, that the downgrade didn't work, though, that's when you realize the damage has already been done. And the bad news is in the stock. Mark my words, somebody's going to come out swinging tomorrow and recommend the stock. Hey, you know what? Maybe many people, they just got the all clear side. Now, to me, all this is very silly. You don't want to wait 30 points from the top to downgrade Microsoft. But the stock does feel a bit immunized after that downgrade, doesn't it? Oh, it's not just tech. Anyone who watched the stock of PepsiCo these last few weeks know it's been a terrible performer. 179 last month, down to 167. And actually traded 165, where it traded at 6 a.m. when they reported the numbers. It was a so-called weaker than expected quarter. So the question is, was it really weaker than expected? I don't think so. In fact, given how analysts spend day after day saying it's going to be a miserable quarter, I thought when I saw the results, they weren't all that bad. Plus, the latter part of the quarter was actually better once PepsiCo started spending more aggressively. Hey, Frito-Lay was making a comeback intra-quarter. The company's sticking by its 8% earnings growth rate forecast, which I think happens to be pretty darn good for a food company. No wonder it ended up finishing up an astounding 3.21%. I found that remarkable. 3.21 cents. Remarkable. This stock, okay, get this. The stock was at 65. I'm going to get this right. It was at 65 when I first saw the numbers. I couldn't believe. I said, wow, those numbers are pretty good. And then it zoomed 5 straight points. That is a remarkable comeback. Just remarkable. I think the people who sold the stock at 165 and closed out at 170.42, I think they need to rethink their MO, or maybe they should quit their day jobs. All right, how about Honeywell? Now, I've been critical of the company, wondering when CEO Vimal Kapoor was planning to unlock value. I was waiting. Today he makes the move to break up a key portion of the business, spinning off Honeywell's chemical business to its shareholders in a move that's reminiscent of how Danaher has repeatedly broken off pieces of itself. It's a welcome new unlocking of value. Yet the market pretty much yawned. Stock rallied less than 2%. At one point, the stock was barely up at all. It's being totally ignored. That is insane. Now, here you have an eagerly awaited spinoff that makes the rest of the company much more focused. 3 divisions: automation, aerospace, energy transition, all very large teams with a now faster growth rate. It is truly terrific news. Honeywell's a large position for my travel trust, and I've been pushing for this gigantic positive change all along. Yet what happens? The stock does almost nothing all morning. At one point, it's almost unchanged. Finishes up $3.67. I thought this should send the stock up at least $5. Talk about complacency. How can people not care more? Oh, you know what? We actually do know the reasons, don't we? First, we've been gripped by how poorly bonds have been trading. Long rates have been going higher for many sessions. Second, we're waiting for the other shoe to drop in the oil market. But here's what I have to say. What the heck does that have anything to do with the greatness of Honeywell spinning off a division that will make it into a leaner, more focused, better-run company with a higher price-earnings multiple? I'll tell you, it means nothing to the Honeywell story. However, on Wall Street, lousy timing is everything. Here's the bottom line. I need you to understand that when analysts downgrade after stocks have already been hammered, when really good investors ignore the positives, then it may be a grim time. But not so grim that we can't make money by focusing on the fundamentals of the companies and not just the economy, the Fed, interest rates, and oil. Let's go to Jim in New Jersey. Jim.
Hey, Jim. A pleasure to speak with you.
Right back
I owe you big time. You're the top of the class. Thank you.
Thank you, Jim. Wow. Thank you very much. I wish my wife were here. I can tell that you feel that way.
Yeah, well, I'm sure she knows. Yeah. So, Plantier was, brought to my attention in February.
Yeah.
I bought it, and then, of course, I sold it.
Oh, why?
Well, so then I wanted to buy it back on a dip.
Okay.
And when is that going to happen? So I bought it at 35, and then yesterday it dropped.
Right. Well, okay. Look, here's the way I feel about Palantir. It's a cold stock. Journals called it that. I didn't have to do that, but here's what you know. This is owned by individuals. They love it. They walk it up. Every time it gets hit, they're buyers. These things happen periodically. It happens to be a good company. I wouldn't buy it up here, but the cult buyers can't get enough, and they take it higher seemingly every day. Stay long and see what happens in Suspecto. Tim in Georgia. Tim.
Jim, love your show.
Tim.
Been watching for many years.
Thank you, Tim. Thank you very much.
Oh, yeah, calling about Carnival Cruise Lines. You know, lately I've been watching it. Things have been looking pretty good. Great bookings, good revenues, earnings, even a reasonable PE today. Yet the company still has high debt. There's a lot of world unrest. And then we now have Milton. Looks like it's going to cut across Florida and potentially be online to hit 2 of their departure terminals. So what's your take?
Well, look, I don't know about the actual weather forecast and where things are going to go. I do know that I do prefer Royal Caribbean. I think it's got better balance sheets, got more momentum, but Carnival's good. I would not look. These cruise stocks are really terrific. They're all good, but Royal Caribbean is my favorite. I also like Viking. All right, listen. When analysts downgrade after stocks have already been hammered, sell. It may look grim, but it's never so grim that we still can't make money by focusing on the fundamentals of the companies. Well, man, but I tell you, with Hurricane Milton here in Florida, I'm talking to Generac to hear how the power generator company is helping millions prepare for the second major storm to hit the Gulf Coast in less than 2 weeks. Then, should you turn some focus to the financials? I'm revealing 3 banks that are earning a spot on my YEV list of strong S&P 500 stocks. Plus, aerospace player Standard Aero made its market debut last week. I'm eyeing its place in the industry and how you should view its initial takeoff to the tape, and you do not want to miss it, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.